In this video, I'm going to show you guys exactly the one free indicator that I use that got me over an 83% win rate, six figures in payouts, and I can literally trade it the same exact time every single day. Using this has my top step P&L over $50,000 this month alone, and this not even over. This is $27,000 on just one account. Refresh, you can see 27,000. On a separate account, you can see $10,500 if I scroll down right here on the week. And then on this other account, you can see $10,751. And additionally, I got another $10,000 account, took a 5K payout, and then blew that one. So that puts my top step P&L at over $53,000 this month alone. Now, here's what no one tells you. Really missed out on having that kind of P&L because my charts literally look like a Christmas tree. Like this is what my charts look like with 15 different indicators, and it was actually killing my trading. I thought that it would improve, and the one indicator that I actually found that worked for me the most was not RSI, MACD, moving averages. I'm talking about the one indicator that replaced literally everything for me and finally cleared my charts. So in the next few minutes, I'm going to show you exactly what it is, why it's outperforming everything else, and how you can set it up to start taking consistent payouts just like I do and just like my students. But first, I'm going to actually show you how to use the indicator, how to trade it, and how to add it to your strategy. You need to understand why most traders actually fail with traditional indicators. Most traders, especially at the beginning, end up thinking that, oh, the more indicators I have, the better confluences, or the more confluences I have, it'll just add a ton of indicators and I'm going to end up being profitable, right? Well, that's actually not how it works. It's legit completely the different, and it's killing your win rate. Look, I had RSI, MACD, moving averages, everything that you can possibly think of. And my charts honestly looked horrible. I wish I had a screenshot and I can go back and find some, but there's probably one on my phone from years ago. Anyways, that resulted in me spending around 2 years just trying to make my charts look like my favorite guru charts, combining everything else that I saw, and that would just magically turn me profitable. And not necessarily, indicators don't just work and turn you profitable. You're putting 10 different ones on your charts at the same time, and they actually all just end up contradicting each other. Here you can see a buy signal with a MACD, EMA, and it's also on a downtrend, so that's kind of contradicting. You can see everything is just mixing and matching, and it just ends up leaving you more confused than if you just didn't have anything. In reality, traders are failing because combining too much. So obviously as a trader, I went down the list, started testing every single one of these indicators to really just find out which one actually mattered. All in all, I finally found it. So let's go ahead, satisfyingly clear all of the charts and actually look at the indicator that turned me profitable and why it actually truly matters and how you're going to add it in your strategy. So it's called the high time frame power of 3 by 2 degrees. It's just called the high time frame power 3. And before you skip ahead and just look for the examples, it's very important that you understand why this indicator works so well. So let me go ahead and explain it for you. This isn't a promotion. I'm not affiliated with this indicator at all. It's just a really good resource for everyone to have, for every ICT day trader. It's printed for me and it's going to do the same for you. So the first thing that's going to happen when you actually click on the indicator is you're going to see a higher time frame candle on the right side pop up besides your lower time frame. You're going to see this big ass candle just pop up on the right of your screen. And you're probably thinking, okay, what does this actually do? Like, this isn't telling me when to buy or sell. It's not going to tell you when to buy or sell. It's not going to tell you anything about support and resistance. But we are going to get directly into what this is telling you. So if you go to the settings of this indicator, you will see the time frame, whatever time frame this indicator is. That's actually what this candlestick is. So you can be on the 1 minute, the 5 minute, 15 minute, or even 4 hour, and it will just hold this daily candlestick, the current daily candlestick. So as you can see, this is a daily candlestick. We are on the 1 minute chart, but it's showing the entire day. Likewise, if you flip it to a 4-hour time frame, which is actually how you're going to use it, this would make it a 4-hour candle, which in obviously the scenario, we are going to keep it on the 4-hour candle, which I recommend you doing as well. Okay, so why does this matter? Can I just like flip through the time frames and go see what the day looks like and go right back? But no, let's explain exactly how you're going to use this indicator and why it actually matters. So the most important concept in the fundamentals of trading is going to be fractals. The fractals concept means that this happens across all candlesticks and all time frames. So let's go ahead and get into it. So first off, I'm gonna put our high time frame candle. Let's say this is a daily candle right here. We're gonna put a top wick, and then we're gonna put a bottom wick, and then obviously we have the body in the middle. So every single candlestick in I'm just going to describe it in 4 steps. The 4 steps is the open, right? Simply just the open. Now, if you are expecting a bullish candle, the second step is going to be for the candle to go down and make the low. So it's going to wick down. So if you're bullish, you're going to open, make the low, and then 3, you're going to push up and make the high of the candlestick. And then 4, you're going to eventually form that wick coming back down and the candlestick closing. That's literally how every single candlestick works for every single time frame. Now, the formation of it is actually displayed in somewhat of a pattern where you're grabbing liquidity on a lower time frame, and that might sound kind of complicated right now, but it's actually super simple, and it only has 3 steps. So the lower time frame genetic makeup of this higher time frame candle is going to show up as a power of 3, meaning it's going to be accumulation, manipulation coming down, taking liquidity, distribution coming up higher, and then pushing down to actually close that candle, and it's going to accumulate again. So that is just the power of 3, okay? So the way that this works, the first step is the candle open. First step is we accumulate. So we accumulate when that candlestick's open. We will then accumulate long enough to form a gap under here or just have some liquidity. Could just be the accumulation lows, then we manipulate lower, okay? Preferably into a 15-minute fair value gap. Step 2, manipulating down, taking out liquidity, which is going to be that bottom of the wick of the 4-hour candle. Sounds simple enough. And that's what we're waiting for. We're waiting for liquidity to be taken and looking for the reversal to the upside. So right when we see price push back to the upside and we get some type of entry confirmation, which is going to be the IPD FVG model, this is going to be distribution. This is a high time frame candlestick actually pushing up. And that is distribution, is the entire candlestick forming. So basically what this strategy does, it helps me catch the top and the bottom of the high time frame candles. And as you know, if you took like a 4-hour candle and you were able to catch all of the points or the ticks within that 4-hour candle, you would absolutely be printing money as you saw before, like I was. And that's what I do to print off money on high time frame candles using the IPD FVG model as an entry model. So, and exactly when I say it works at the same time, literally every single day. And that's because we are trading right exactly when one of these high time frame candles open. It's going to be between 9:50 and 10:10 a.m. when we are trading the power of 3 and the IPD FVG model, meaning it's the start of the 4-hour 10 a.m. candle. So if you want to follow along with me so you can actually set this up and start trading it, you want to go and open up TradingView, click on indicators, click on high time frame power of 3 by 2 degrees. I use this one. There you go. Go ahead and double click it on the side. You can go in the settings and you are going to mark it out as a 4-hour candle. Once it's on the 4-hour time frame, go ahead and close it out and you should see a 4-hour candle. Now you're probably like, Daniel, okay, what lower time frames do you follow along with it? Is it the 30-minute, hourly, 15? What is it? You want to be on the 1-minute time frame primarily when you are looking for your entry for the IPD FVG model. So go on the 1-minute time frame and make sure that the indicator candle is on the 4-hour. And the next thing you're going to do is mark out the 9:50 to 10:10 a.m. macro. This is literally just the last 10 minutes and the first 10 minutes of the hour. of the AM session. Now, this indicator isn't going to turn you profitable just by using the indicator. You actually have to know how to use the IPD FVG model. And like we talked about, the higher time frame candles are allowing you to catch a lot more ticks and a lot more points, which means a lot more money out of the market. If you're just looking at the 4 hour and thinking of what the candlestick is going to do, it's the same thing as the 1 minute. Could you tell me what this 1 minute candle is going to do? No, you would have to drop down into a lower fractal time frame to actually see what's exactly going on near that top or bottom wick and how it's exactly going to form. Again, we're catching the entire expansion of the higher time frame candle. They're not trading at this time because this indicator is literally 10 times more powerful when you trade it between the 9:50 and 10:10 macro time. Now, why especially this time? That's because this is 30 minutes after market open, which gives us more opportunity to let price give us extra confirmations of what's going to go on and avoid the very commonly taking market open fake out, which is called the Judas swing. Okay, I could have potentially been bullish on this. The market was quite high up. It was respecting a higher time frame gap, and boom, liquidity sweep. Boom, inversion, fair value gap. Okay, gonna take the long. And as you can see, if you would have just waited for the 10 a.m. candle, you wouldn't have gotten stopped out. That's why you always wait for the Judas swing with the IPD FVG model. And that's just when the market's faking you out. Now, what are we actually waiting for the 10 a.m. to open? We can clearly see the direction of the bias is actually bearish. We've inversed a couple high time fair value gaps. We've confirmed that we can go short, and now we just have to wait for our setup. And now that the 4 hour candle opens, we are looking for the 4 hour power of three, which is going to be accumulation, manipulation, and distribution. So price is clearly not going anywhere here. And then we are waiting for our manipulation phase. But you're probably wondering, okay, how do we actually know, like, oh, if it sweeps right here, is that our manipulation? How do we know when and where this manipulation is actually going to occur and stop going up? Because we can infinitely try and long what we think is a manipulation, but it ends up just being a bias split and you get stopped out 5 times and lose on the day. In specific, there is a specific time frame that we need to flip to see price is typically going to consolidate long enough at around 10 a.m. for us to form a brand new 15-minute fair value gap on price. Okay, so clearly right here we have consolidated for 15 minutes in this accumulation range. Which I'm going to do is flip directly to the 15-minute and see if I can spot a 15-minute fair value gap that we want to manipulate up inside of. And the one closest to price is this one that you can see right here above the accumulation range on the 1 minute. We don't need price to go anywhere crazy, so back down to the 1 minute time frame, we are going to wait for the manipulation to happen up inside of that 15-minute fair value gap. And there we go. This is our manipulation move into the 15-minute fair value gap. And as we can see, it is a very instant reaction. And now what are we going to do? We're going to instantly trade this. No, this would be predicting. We are going to react. We are going to wait for an entry confirmation. And we are going to make sure that price is going to actually start that distribution leg. And what are we going to be waiting for? We're going to be waiting for the IPD FVG model with a change in state of delivery and a fair value gap going through that change in state of delivery between the 9:50 and 10:10 macro time. And that's why it's so important to have this indicator next to you, because you can see what's going on that higher time frame. So now we wait for a confirmation. As you can see, we have a change in state of delivery with a fair value gap. And then for an extra confluence, we have an inversion fair value gap. And an inversion fair value gap is when a fair value gap gets closed below. So in this scenario, this fair value gap right here, the candle body closes below it. This would be an inversion fair value gap or an entry confirmations for us. The other entry confirmation that I like to take if I don't see any fair value gaps, which can happen, because if we don't have any inversion fair value gaps, that's just an extra confluence that we use. But we don't need the inverse fair value gaps. All we need is going to be a change in state of delivery, and that's going to be a candle closure right below there. And you can see right under the change in state of delivery, we have that fair value gap that we are going to enter off of. So what you want to do is wait for that most recent leg to the upside. I would take this opening price of this first up close candle. And the same thing if I was bearish, I'd take the opening price of the first down close candle that created that leg up. So all I'm going to do is draw out this line, wait for a fair value gap to actually close below this low, which will happen as I go on a little bit longer here. And then stop loss at a safe high, and typically targeting some type of liquidity, which is going to be any of these swing lows on this left side. As you can see, this is going to be the massive swing low in the 1 minute. So we can target either these relative equal lows or that swing low as a higher time frame target. So we have the risk to reward and stop loss at that high. And again, here is exactly how I got an 83% win rate. It's because I am waiting for the market to actually show me and tell me what it's going to do. I'm not just trying to predict it and set random limit orders. So we can see that this trade is going to play out, and you're going to see that it creates the expansion, the distribution leg of the entire 4-hour candle, and it just continues down. So if you want my entire IPD FVG model, as you can see right here, this is going to be a PDF on it. All you have to do is go click the link in the bio, and it's going to be the first one on the top. And this literally goes over everything you need to know about the IPD FVG model. All right, now let me walk you through a real trade that I took last week using this indicator. So again, go ahead and mark out the 30 minutes after market open, which is just going to be just mark out 9:50 to 10:10, because that's when you were actually looking for your trade entry. Now you're on the 15-minute time frame. I can already see that price has formed a brand new 15-minute fair value gap close to me. So that is going to be my area of interest that I want the market to manipulate up inside of. So here what we are going to do is mark out the 10 a.m., which is going to be the 4-hour candle that is going to start on this indicator. And I'm already on the 15-minute time frame. And I can see before this candlestick opens that there has been a brand new 15-minute fair value gap that is formed. So that's probably what I want to be using when we are thinking of where price is going to manipulate to. Now, the accumulation can happen just during or just a little bit after macro time, or it can happen before macro time. But basically, right around this opening is where we want to see the accumulation start. As you can see, it starts. So prices started to accumulate right now, and then we wait for that 4-hour candle to open. Okay, so here's a 4-hour candle. It has opened. It's pretty much instant. Price manipulates down into that 15-minute fair value gap. As you can see, it's that bottom wick of the 4-hour candle down into the 15-minute fair value gap, which we were expecting it to manipulate inside of. Now, all we're going to do is wait for an entry confirmation, which is going to be the IPD FVG model with a change in state of delivery, a fair value gap, and then possibly an inversion fair value gap as an extra confluence. So as you can see, this high above here is going to be the change in state of delivery, the opening price of the last or the first candle stick that created that manipulation leg down. So this is where we're going to go ahead and see what happens and see if we close above. Right here, you can see we manipulated down deeper into that 15-minute fair value gap. We got a change in state of delivery and then also a fair value gap, all within the macro time, which is going to be your entire IPD FVG entry model that I have gotten over an 83% win rate in. So we manipulate down deeper, as you can see clearly on the 4-hour candle. And then we can go ahead and see what we have a very clean entry confirmation right here. We have an inversion fair value gap as an extra confluence, and we are going to use a change in state of delivery. We're going to see that this candle is going to create our fair value gap to the upside. And as you can see, you want to keep your stop loss at the bottom of the manipulation leg of that 4-hour candle. And then from there, you are going to put in your set risk amount and aim for your liquidity with a good risk to reward of at least a 1. So for the strain, the main target was actually a previous day high. And this was only going to be a 1-to-1 risk to reward. As you can see, it plays out here perfectly with that fair value gap entry in the IPD FVG model. And this trade literally hits in under 10 minutes alone, making me over $5,000 that day. So no guessing, no hoping, no more starting putting 10 different indicators on your charts. Literally just one clean setup, traded one specific time of the day, which is my IPD FVG model that completely changed my life and made me over 6 figures. And same with my trading students. Like Duin took over a 50K account with Apex to over $75,000 account balance, just using my IPD FVG model aligned with this high time frame power of 3 with a 83% win rate to a 94% win rate on the month. As you can see, this is literally repeatable. You can do this every single month and it happens every single day. You don't need 10 different indicators. You are just cluttering your charts. You just need one indicator, one setup with the IPD FVG model traded at a specific time. So that high time frame power of 3 indicator gives you all the high context without all of the noise. So this provides you an easy mechanical and easy to follow entry model that you can execute day in and day out with discipline. If you've been overcomplicating your trading, this is definitely your way out. I assure you that it was for me. So clear your charts, use this indicator, and start trading at 10 a.m. Eastern time. This is how you're going to go from losing consistently to getting payouts. So if you are serious about mastering the IPD FVG model and want to get one-on-one help to get funded, I actually started a one-on-one mentorship program where I'll build you an exact roadmap to help you pass challenges, consistently ripping 5-figure payouts every single month. And unlike pretty much everyone else in the entire space, I printed it myself and guarantee results for my students within 4 months, getting you 6-figure funded. And if you don't, I will work with you for completely free until you do and personally send you $1,000 back for wasting your time. And I guarantee you profitability. If you want to go ahead and apply for the one-on-one mentorship, I'm only accepting 10 students this month. I don't want the quality to go bad. I actually like having a one-on-one time. That's why I can't accept too many people. The link will be down below. Go ahead and see if you even qualify for the mentorship. Go ahead and click that link below to apply.